Good morning, sir. My name is Legri Savitri. I'm from Accounting D. This is my video record about the article Basic Accounting Principle and Guidelines. Since GAAP is founded on the Basic Accounting Principle and Guidelines, we can better understand GAAP if we understand the accounting principles. The following is a list of the 10 main accounting principles and guidelines together with a highly condensed explanation of each. Economic entity assumption. The accountants keep all the business transactions of a sole proprietorship separate from the business owner's personal transaction for legal purpose. A sole proprietorship and its owner as considered to be one entity, but of accounting purpose they are considered to be two separate entities. Monetary unit assumption. Economic activity is measured in US dollar and only transactions that can be expressed in US dollars are recorded. Because of this basic accounting principle, it assumes that the dollar's purchasing power has not changed over time. As a result, accountants ignore the effect of inflation and consider amount. Time period assumption. This accounting principle assumes that it is possible to report the context and activities of a business in relative short, distinct time intervals such as the 5 months and the 9/31, 2018, or the 5 weeks and the 9, 2018. The shorter the time interval, the more likely the need for the accountants of estimate amount relevant to the period. Cost principle. From an accountant's point of view, the term cost refers to the amount spent when an item was originally obtained, whether that purchase happened last year or 30 years ago. For this reason, the amounts shown on financial statement are referred to as a historical cost amount. Because of this accounting principle, asset amounts are not adjusted upward for inflation. Full disclosure principle. In certain information is important to an investor or later using the financial statement. That information shall be disclosed within the statement or the notes to the statement. It is because of this basic accounting principle that numerous pages of footnotes are often attached to financial statement. Going concern principle. This accounting principle assumes that a company will continue to exist long enough to carry out its objectives and commitments and will not liquidate in the foreseeable future. If the company's financial situation is such, the accountants believe the company will not be able to continue on. The accountant is required to disclose this statement. The going concern principle allows the company to defer some of its prepaid expense until future accounting periods. Matching principle. This accounting principle requires companies to use the ICRO basic of accounting. The matching principle requires the expense be matched with revenues. Revenue recognition principle. Under the ICRO basic of accounting, revenues are recognized as soon as a product has been sold or a service has been performed. regardless of when the money is actually received. Under this basic accounting principle, a company could earn and report revenue in this first month of operation but rephrase in actual cash in the debt month. Materiality. Because of this basic accounting principle or guideline, and accountants might be allowed to violate another accounting principle if an amount is it's insignificant. Professional judgment is needed to decide whether an amount is insignificant or immaterial. Conservatives. If a situation arises where there are two acceptable alternatives for reporting an item, conservatives direct the accountants to choose the alternative that will result less net income or less asset amount. Conservatives help the accountant to break a tie. It does not direct accountants to be conservative and objective. The best accounting principle of conservative leads accounting and anticipate or disclose losses but does not allow a similar action for giants. For example, potential losses from lawsuits will be reported on the financial statement or in the notes, but potential gains will not be reported. Also, and the content might write inventory down to a amount that is lower than the original cost, but will not write inventory up to an amount higher than the original cost. Okay, sir. Thank you.